Hello and welcome to this week's crypto update. What's happening in the macro and how might it affect crypto and risk on assets in general? So Twitter is full of buzz with the last week, 10 days, even 2 weeks talk about us having hit a crypto top. Have we seen the top? Are we now on the way into a bear market? If you're still a believer in the 4-year cycle, there's every chance this is true. In the traditional 4-year cycles, at this time, you would have either have seen the cycle top or be very close to the cycle top at this stage. So why are people calling for the crypto top? Why do they feel that maybe it has been in? Well, there's plenty out there to give concern to people. The US economy has lots of alarm bells going off that could suggest that maybe we're moving into turbulent times or even recessionary times. What's happening out there? So we've seen the banking issues last week. We see Zions and Western Alliance. They both announced they were victims of fraud on loans to fund that invested into distressed commercial mortgages. There's been a few, as they say, bodies coming to the surface that would suggest that maybe there's problems out there. The VIX index that measures the volatility in the markets and in the sentiment out there spiked quite quickly, but has started to come back again a little bit. It appears in general, and at least the banks are coming to tell us that it appears to be contained. These are a few individual situations. It's not systemic. It's not going to cause a wider problem. While I believe that may well be the case right now, is this indications as to what might happen coming down the tracks? There's definitely risk out there. On the other side, we see Q3 earnings for the major banks are in general have been good, and JP Morgan's Jamie Dimon has come out and said credit quality remains quite good. Now, he was the same person that said a week ago when this news came out that where you see one or two cockroaches, there's probably many more. In other words, these have come to the surface. Is there more to come? I believe there's every chance that there is. It doesn't mean it's going to happen next week or next month, but like we've seen in the past, when one or two issues arise, it usually has a knock-on effect elsewhere, but it doesn't have to come through straight away. It could come a couple of months later. So it's certainly something and a space that we need to keep a close eye on. On top of all that, we see US government gross national debt surpassed 38 trillion on Wednesday. It feels like a week ago we were talking about 37 trillion. To be exact, the debt pile hit 37 trillion in August, so just 2 months ago, and this is the fastest accumulation of $1 trillion in debt outside the pandemic. It's just literally, it's not funny anymore. The level at which they're increasing debt is just not sustainable. This has to come home to roost at some point in time. But one thing it certainly tells us is there's two options to come out of it. One is default and the other one is debasement, where they're just simply going to try and print and inflate their way out of the significance of this debt. But there certainly seems to be no indication of them slowing down with this increase in debt anytime soon. We're also seeing the labour market weakening. We've seen numbers coming out now over the last number of months that suggest that. We were talking about that 12 to 18 months ago, saying that the real numbers were much less than what they were telling us. That has come true. They revised the figures by nearly 1 million jobs just a couple of months ago, and since then the numbers are showing weakness. Of course, we don't have any numbers over the last month or so because the government is still in shutdown, but the CPI numbers, the inflation numbers are coming out today, so it'll be interesting to see what's in there, but it seems unlikely it's going to change the direction of the Fed in the near term. We also see the price of crude oil jumped higher after the US announced sanctions on Russia's biggest producers. Now, this isn't getting as much attention as I was expected it would, for the simple reason is inflation is a key factor here with what the Fed are doing. Inflation hasn't been going up like they may have expected from tariffs, but maybe it's been offset by the fact that oil has been going lower and lower in price. And of course, oil is used for everything. It's nearly used in the production of all things, and as well as that, it's used for the transportation of mostly all things. And so it has a very direct effect on inflation. If the prices have been coming down, which they have been over the last number of months, maybe that's mitigated the potential upside pressure on inflation through tariffs. A lot of the tariff pressures haven't even come through yet anyway, because the likes of tariffs on China haven't been implemented yet. And of course, that's a whole other ballgame with regards to China. So this this is pretty major in that if this continues to tick up, it's going to have an upward pressure on inflation, and then the Fed are going to be caught in an even tougher decision on whether they reduce the inflation, reduce the interest rates to help the labor market, but in turn that could put additional pressure upwards on inflation, and so they'll have that balance to go. At the moment, it very much looks like they're reducing interest rates to try and help the labor market in the hope that inflation isn't going to tick up any higher. So on top of all that, we see the fear and greed index is at a low, which means that there's a lot of fear in the market. It's currently in fear at 28 and nudging closer and closer down towards 20, which is getting into extreme fear. Now, the positive about extreme fear is when it gets there, is usually a really good buying opportunity. Will this time be different, or are we in a bear market? So, Standard Chartered's global head of digital assets research, Jeffrey, says a dip below 100k for Bitcoin seems inevitable by this weekend. So that's going to be interesting to watch. And we'll have a look at the charts and see why maybe that might be true. If we have a quick look here, we can see this is the 4-hourly chart. Every bar is 4 hours. You can see here, as the price has ticked up over the last number of days, you can see the volume is actually going down, which is an indication that as the price goes up, there's not a lot of buying pressure in there, not a lot of interest in buying at these prices, which would in itself suggest there's weakness in the market, and there's a good chance there's a somewhat of a pullback here. Whether it's something minor or much more major, who knows? But a lot of the major pullbacks have happened over the weekend, and as we see, some are actually calling for that and believe it is going to go. The markets are manipulated. We all know that. If you were the people manipulating the market and you truly want to shake people out and truly want people have give up on crypto, sell out their positions so that they can come in and buy them themselves, I would see a flush out below 100k being something that they would do. And so I think that's certainly a strong possibility. Of course, doesn't mean it's happening. Again, as we said in last week's video, if Trump puts out a really strong positive tweet here, of course, this could all go running. No one knows the direction of Bitcoin and the rest. But what are the positives out there that could help risk on assets and Bitcoin and crypto in general? Well, of course, rate cuts are pretty much baked in. It's almost 100% that we're going to see a 25 basis rate cut in this meeting, and pretty much baked in that there's going to be one in December as well. That's usually a good situation for risk on assets. On top of that, a Chinese trade deal. I do believe that the US will make a trade deal with China when Trump goes out to visit the head of China before the end of the month. Why? Because both of them need each other. Despite the posturing that they've been doing for the last number of weeks, they're trying to build in a positive negotiating position for themselves ahead of this meeting. But ultimately, they both need each other. Both countries aren't in the best positions at the moment. They need each other from both sides, and so I see a strong deal being done. And with that, we see, I believe, some very positive outcomes for the markets and risk on assets. We also see that there are strong numbers there coming from the Mag 7, the top companies in the S&P, as well as banking themselves. We see that these companies are getting more and more profitable, but they're actually reducing the number of employees because they're using AI more and more. Is AI in general in a bubble? Even the people within it themselves are saying that it is. If that bubble pops, the stock market comes back a long way, and we could see complete repricing. If the stock market comes back a long way, then I certainly can see that being the lead indicator moving towards a recession. Is that likely to happen soon? I don't think so. The ISM is also showing very strong. It's a business indicator. If that goes above 50, it's usually really good for risk on assets and certainly the likes of altcoins. We also see that we have high liquidity at the moment, and in a high liquidity environment, it tends to be really good for risk on assets. So there's an awful lot of positivity or positive indicators that would suggest that an altcoin season has yet to kick off. And of course, then there's the talk of a 5-year cycle versus a 4-year cycle. If you still believe in the 4-year cycle, it's highly likely we've already had the top or may have that before the year is out. And many people are calling saying that we've already had it. However, there's a lot of talk now about a 5-year cycle. So what's the 4-year cycle? So all along, people have been saying, Bitcoin halves every 4 years. And after that Bitcoin halving, a year to year and a half later, you see the top of the market both for Bitcoin and altcoins. And if that is the case, we've probably hit that top. However, it has been put out there now that the 4-year cycle wasn't dependent so much on the Bitcoin halving, but rather on the liquidity cycles. And the liquidity cycles have been in 4 years and have coincided, but both the elections, which are of course every 4 years, and also the Bitcoin halving. But now, since 4 years ago, the liquidity cycle has been changed from 4 years to 5 years through policy changes. And if that holds true, and the liquidity cycle and business cycle has been moved from 4 years to 5 years, then that would suggest that we absolutely have not hit the top, and that we have every opportunity or possibility for Bitcoin to go to new highs from where it's from. That doesn't mean we want a big pullback in the way first, but over the next 3 to 6 months, that we don't see Bitcoin absolutely go to all-time highs and altcoin season to follow. Of course, there's no guarantees of that, but that is my base case. That is what I believe is going to happen. But of course, we've seen there's a lot of talk about gold. Gold has hit all-time high after all-time high over the last number of months and has done extremely well over the last 2 years. We have spoken about owning gold for 2 years now. Is now a good time to be getting into gold? I don't think so. I think gold has reached its local top. There's a bit of a pullback happening now. Many believe that there's going to be a rotation from gold into Bitcoin, because one thing more and more people are awake to now is the debasement of the currencies. The dollar has been debased by 47% in just 4 years. That's the equivalent of having $100 in your bank account 4 years ago, and now with only having $53 there. If that actually happened in that way, there'd be civil war. But because it's done through debasement and inflation, people have just accepted it. But more and more people are recognizing it and starting to buy into real assets. Gold is absolutely seen as real money and the true real asset that's out there. But of course, many people feel Bitcoin is the same. Gold and the movement of gold and the chart of gold tends to lead Bitcoin by 100 days. Bitcoin's had its run, gold has its run. Are we going to see a rotation, a sell out of gold and a rise in Bitcoin? I think that's highly likely. Overall, what's the overall feel at this stage? While Twitter is full of crypto top being hit, it is not my base case. Again, I don't know. I don't have a crystal ball as to what's going to happen next. But my base case is there is a potential for another big shakeout of Bitcoin. After that, there's a lot of factors that are lining up that would suggest that we absolutely can have a very significant run into the end of the year and maybe into first quarter of next year, in which Bitcoin and then I believe the altcoin season can kick into gear. Of course, that's all based on the economy at least holding its position and not running into a recession. But ultimately, in the longer time frame, that recession is coming. There is trouble on the way. I do believe there's an AI bubble, and that's not just me. The people within it, the top names, are saying it themselves. And if that bubble pops, the stock market pulls back significantly, and considering 50% of the economy, the spending in the economy is coming from the top 10%, those top 10% heavily invested in the stock market. If we see a strong pullback there, we see a strong pullback in spending, and that certainly has the potential to move us into a recessionary time. Watch this space. There's a lot going on. It's never been riskier to be inside in risk on assets, but the big opportunity might be just around the corner, but we have to keep an eye on what's happening on the macro. Hope you all found that useful, and we'll talk to you all very soon.